Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. And we are looking at some of the ripple effects from Budget 2025 in terms of what's happening in the stock markets. And to help us out, we've got Sani Hamid. He is the Director of Wealth Management for Financial Alliance. Good morning, Sani. How are you doing today?
Good morning. Thank you very much for having me.
Always great to have you on, Sani. So let's jump into Budget 2025. We saw a lot of goodies being handed out. What do you see are some of the main sectors that will benefit from all the potential opportunities for investors?
Well, the budget was quite wide-ranging. Two of the key sectors you probably in general would be business and consumers. So it targeted mainly in order to make business more resilient in a very uncertain future, and it kind of gave a lot of support for consumers. If you look at it, if you've ever studied economics, this is basically the C and the I in that particular GDP equation, C plus I plus G, X minus M. So it's really hitting onto two main engines of GDP growth. And when you break it down, of course, this goes into what we call the transfers to citizens, that's that 710 million that's widely quoted, and investments in AI, green energy, financial services. So, but in a nutshell, those are the two pillars and engines which I think the government is supporting and hoping that the economy will stand up on its own by doing so.
Yeah, talking about engines of growth, we also have investments going into AI solutions, and this includes the Enterprise Compute Initiative, where up to $150 million will be introduced to help SMEs jump on board implementing AI solutions. So on that front, what sectors might benefit from the increased investment in AI?
Well, AI is wide-ranging. I think it's really a whole kind of, you want to use the word supply chain, meaning from the suppliers of AI, the infrastructure providers of AI, telecommunication, telcos, the SMEs itself. While implementing AI, will see productivity. We must remember that AI is moving so fast that basically a lot of companies are being left behind. And this is something people are talking about, massive changes in the next couple of years, not even decades. And so I think it's a good move that the government is actually trying to push SMEs to get onto this bandwagon rather than left behind. And of course, there will be subsectors like, let's say, for example, healthcare, where the application of AI in terms of diagnostics, in terms of medical services would actually boost its productivity many folds, in my opinion.
All right, let's take a look at the other side of the equation. And in this year's budget, we got a lot of goodies, but notably not a lot, or if any at all, tax revenue generating measures. How much is this a surprise to you?
Well, typically you would find, and so therefore I would say that it came as a bit of a surprise, but at the same time, one could look at it as another way of boosting consumption and investment, because tax is, after all, what we call a dampener on aggregate demand. Because you take away money from individuals and companies, you're actually dampening what we call a disposable income from these entities. So by leaving a little bit more money in their pockets, you're expecting or hoping that they will spend, they will consume, they will invest. So it's just another way of doing so. And we must remember that not many countries can do it. Singapore is in a very privileged position to be, I believe, in a way financially possible or fiscally possible, not to ramp up revenues and taxes and such. So I think it's probably to its advantage.
Okay, another space we were looking at very closely is what's happening with property. No major new announcements on that front. How does this square with the outlook for home prices and concerns over housing affordability?
Well, in my view, I think it's two things. One is we are going into quite a bit of an uncertain future with, the massive tariffs introduced by the Trump administration. There are people who are looking and saying that this could cause a global slowdown. On top of that, we also have in the pipelines the effects from the property measures that we've seen over the past couple of months, probably yet to hit the economy in full force. So with these two big uncertainties, I don't think the government wants to do anything more at this point. It's flexible. Whenever it needs to, it can come in. But in the budget itself, it probably is thinking, let's hang on for a while, let's see what happens, and act accordingly on a so-called case-to-case basis as we move along.
All right, we've been in conversation with Sani Hamid. He's the Director of Wealth Management for Financial Alliance, helping us to take a bit of a snapshot on the effects of budget on the markets. Sani, thanks so much for your time and insights this morning. Great chatting with you.
Thanks for having me.
All right. Hope to have you back on again soon. Stay on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.